Hi everyone, my name is Wilson and welcome to ETF Spotlight. For today, we'll be sharing more on how investors can position their portfolio in a highly volatile market caused by geopolitical events. Of course, we also help you to discover some ETF that might be useful. As many of you already know, Russia invaded Ukraine on the 24th February 2022, and that sent shockwave that reverberated through the markets. Consequently, many Western countries sanctioned Russia and many even cut diplomatic as well as trade ties with Russia. Perhaps the most significant was US and UK's pledge to eliminate reliance on Russian oil as well as Germany's termination of the Nord Stream project. This is significant because Russia is the world's third largest oil producer and coincidentally, Europe imports the largest part of its oil from Russia. Since the invasion, energy and basic food related commodities have increased sharply with WTI crude rising above $120 per barrel and wheat hitting all-time highs, increasing 85% year-to-date, with substitute grains also increasing sharply, pushing the Bloomberg Grain Index up 13.6%. Global market indices also declined after the invasion, as investors were wary of the economic effect of this geopolitical tension. So, the question is this a cause for concern? What should investors do? Well, it would be useful to look back on the history for some answers. As seen from other geopolitical events, they are often not protracted, and even so, stocks have been relatively resilient in the face of such events. For more risk-averse investor, a diversified portfolio may be the way to go. We can see that a diversified portfolio saw less losses compared to a full equity exposed portfolio, and during recovery, it still managed to capture gains despite trailing an all-equity portfolio. Using the S&P 500 as a proxy for an all-equity portfolio, several asset classes such as commodities, REITs, provide effective diversification as indicated by a correlation coefficient lesser than 1. Risk-averse investors might consider asset classes and sectors with lower market correlation to diversify their portfolios to reduce volatility and capture gains during recoveries. Sectors such as real estate, commodities can be looked at based on a correlation coefficient of less than 1. Additionally, we have identified clean energy to be another sector that has correlation coefficient of less than 1. And with the prioritization of energy security, many countries will realize that high reliance on traditional energy do not bode well for them in the future. And this will shift the focus towards finding an alternative such as renewable energy. Investors can adopt a core satellite strategy to gain diversification for their investments, and on Syfe platform, investors can use Syfe Core Portfolio, which is a diversified portfolio that provides exposure to broad-based market to form their core investments. While the satellite portion can be represented by higher risk investments such as specific sectors, ETF, or trades. The fund that were highlighted will provide specific exposure to certain sectors that can help investors position their portfolio in such volatile times. Investors should also take note of the associated risks while investing in specific sectors. So we hope this video has shed some light on how you can better prepare yourself and take action for your investment.